Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today is Thursday, May 15th, 2025. I'm going to share some disclosures with you. I'm going to put a few links in the chat if you want to see some more information. It's an interesting one. Today we have our headline kind of focuses on healthcare, but I was also considering the potential idea of a title of today's webinar of are there any sellers left? And I think it's interesting because it's something we've been talking about and it's kind of playing out. So I'm going to just kind of mention that as well. I'm going to show you the standardized returns of some ETFs that we're going to be talking about. Oops, come here. All right. These are standardized returns of some ETFs. So remember, if you go to tradestation.com and then you go to, just on the home page and you scroll down the page, you're going to see a blog post. I should go to TradeStation. I'll show you. So if you go down the main page of TradeStation.com, you'll actually see today's webinar is listed, and it basically talks about historical sell-off in healthcare, and that is kind of interesting. Where'd it go? I'm not sure where we're now. Anyway, let's go to Insights, Market Insights. Sorry about that. Healthcare is historic collapse. That's what I'm talking about. But one of the other things I was thinking about as a potential title today was going to be, are there any sellers left? And I think that's, pretty interesting because the kind of price action we're seeing in the market right now really is kind of indicative of there being no cash on the sidelines, and it's really behaving more or less as we had indicated in the last few webinars we did. We talked about the fact that we were going to that we were in a spot where interest rates were headed higher. This is a 10-year Treasury. Y'all know how to get to some interesting stuff with this, but we had talked about the potential for upward pressure in interest rates that was essentially kind of consistent with previous markets we'd seen when people focused on large cap growth, and that's exactly what we see. If we look over here on our key ETFs and we kind of look at the performers in the last week, we can really see that technology and consumer discretionaries have really led, and that's kind of the large cap growth kind of thesis. So this is exactly kind of playing out as we'd kind of look for. Now, our original kind of idea was that Nvidia's earnings coming up later this month would be the drag, but instead we got these remarkable sort of announcements involving technology in the Middle East, and I'm going to be getting to those. But I think it still just kind of shows that this is an environment where, essentially there is a lot of cash on the sidelines. Now, we had talked about the historic collapse of sentiment according to the American Association of Individual Investors, being bearish for something like 10, 12 weeks or something, and that had never happened in all of history. It didn't happen in 1987, didn't happen in 2008, 2009, it didn't happen during COVID. So we saw a real collapse of sentiment, and now it's actually flipping back the other way. Today's latest data from the American Association of Individual Investors actually shows that we're back under 50% bearish. So that's actually pretty interesting. I also think it's important to realize that we have been climbing a wall of worry against a hawkish Fed, which is actually potentially quite bullish, because essentially it's like the thing of working out and running with weights or something like that. If you can actually perform with those impediments and things holding you back, then when those things go away, it becomes even more of an interesting sort of thing here. So from my perspective, you look at today, we had the data today, we had retail sales, we had CPI this week. If you look out into the future now, we don't really have anything. Look down the our rundown here, but we don't really have anything until, where is it? I put it here. Until the 28th, when we have Nvidia earnings and we have Fed minutes. So basically, and then we have Memorial Day before then. So the market can get into spots when it has essentially a drift, a kind of, and I kind of call it like a holiday sort of just lackadaisical drift. And I think we're in a spot where we might actually see some of that. So we look at the overall price action of the S&P here. It's interesting to see that, this is now just kind of continuing to drift higher. In fact, let's look over in this workspace. This actually shows the chart that we have in today's article. And what's interesting to me is this price zone here, essentially this big chunk, these big candles at the end of February and early March, these candles now are essentially a spot that can become like a price zone where we just kind of drift and sit. And so if you look over here on the actual, on this chart, you can see here, this is the chart in my blog post for today. It's doesn't show today's price action, but we're in this range. And so for me here, the market can kind of just sit and drift here as we move toward Memorial Day. And I mean, that's like basically a week and a half or 2 weeks or something from now. What is it? It's you know, the Monday after next week. So, I mean, that's a period of time here where the market can essentially drift in a low volatile environment with the VIX relatively low and people targeting individual sort of stocks, which is the kind of the price action we've been talking about. And it's more or less what we're seeing now. So I think it's really important to realize this environment now is no longer correlated volatility. It's no longer big index-based moves. It's now going to be small individual names moving as the index kind of sits and drifts. And like I said, I think this range here is important for us to kind of be aware of. Um, Also today, if you look back over on the price chart of the S&P, you can see that we now have today a bullish outside day. Now, in my view, a candle like this is not necessarily bullish. And the reason I say that is because an outside day in general can be a reversal pattern. It doesn't mean it's necessarily like bearish, but when you have an actual outside day make a lower low, higher high, it can simply mark just end of the road for a while. It doesn't mean necessarily like market's going to go down, but this kind of pattern with this kind of resistance and the kind of catalyst, the kind of calendar we have ahead of us might kind of suggest here. It also might actually confirm more of an index neutrality, but individual stocks with having some potential. And it's pretty interesting today. If you actually look, today Jerome Powell came out again, and he was hawkish pretty much, kind of continuing to talk about, we're worried about we're going to have inflation and all these sort of things, and the market is fine with it. And I think it's actually important. I want to go over to another chart here because I think this is very important. I was very worried about the 10-year, and I was looking at this is the weekly chart on TradingView of the 10-year Treasury yield. There was actually a trend line here that we broke that had me kind of concerned, and there are things here that you can look at and be concerned about. So one of them, for example, is the fact that we have essentially a kind of high basing pattern here. If you look, this is potentially suggesting that yields could run to the upside, and this is something to me that was like kind of a risk that's out there. And I want to just point out, let me hide myself so you can see the chart better. But I think the key thing here is that that's one scenario that could play out. We could have, oh my God, we break the uptrend and this thing runs away over 5%. All those things are things we have to think about. But what if it doesn't happen? So we do state of the market on Mondays. In state of the market, we talk about the indexes and the levels, and we had identified a potential area at 460 to 465 on the 10-year on the TNX, and we said that was maybe a level we would melt up to, and in that process there'd be weakness in small caps and things like that. The thing is that what if we're actually not even getting to that level? So we put this back on a weekly chart, and you actually look here at the 10-year, and you look at where the kind of some of the levels that might actually make some more sense to kind of look at. I mean, you could maybe argue here that we're basically at that level. This was basically a close closer to the closes. Actually, no. I mean, basically, the point is that if you kind of look, I mean, you could kind of argue that we've basically hit the level. So, I mean, this can be tricky, especially things like the Treasury yields I didn't look at as much, but somewhere in here between kind of 445 and 465, this could be hitting resistance. Now, I had expected it higher, but what if we're starting it now? And the reason I say that is, what do we have? Today we had Jerome Powell. Today we had PPI. Today we had CPI. What do we have going forward? Well, we don't have very much of anything. So I think that that's the actual kind of risk here, is that at this point, anything that might push Treasury yields higher might have already happened. So if that is the case and we have an outside day today, a reversal pattern, that might actually also mark this kind of near-term sort of top. And maybe what we see here is a kind of peaking in yield. So to me, this is very important, because if we don't get the runaway yields, then we could have a situation here where we get a rotation to small caps and things like that. So I think going into this kind of drift into the holiday season, the holiday of 6 to 7 trading sessions out, this might be something we have to watch out for to see if we might get some rotation into small caps. So this is really something I'm kind of watching. This reversal, like I said, happened a little lower than I expected. However, if you look at the calendar, it could make sense because there's not much else on the calendar right now that could push yields to the upside. Also, it's important, look at the dollar index here. We had talked about, the weekly and the dollar index holding these levels. And what's interesting here is again, we're seeing yields lower. We're seeing the dollar potentially inch higher. It's a reversal of the sell America trade. So even though we're getting a little bit of a bounce in gold and stuff today, things like that, just realize we could be entering a period here of things going the other way on some of that trend. So that to me is kind of important. All right. So another thing that was just kind of interesting today was that Foot Locker got acquired by Dick's, and not a big company or anything like that. You see the stock exploding higher today. But the key point is that this is a reminder of M&A. This is a reminder that other things can happen. And again, this is something that might favor some kind of rotation back to American stocks and the non-mega cap tech. And not to say anything to me bearish with mega caps, more just a question of this could actually see something of a reminder to people that what M&A can happen, IPOs can happen, and I say that because Wall Street, investment banks, things like Goldman, Morgan Stanley, JP Morgan, those kind of Wall Street banks and these big overall idea of deal making securities firms, all those things might actually be more of a theme we see in the coming week. So I want to kind of point that out here is that we've seen some IPOs that have gone well. We've seen some M&A and stuff like that kind of popping up. And it could also be part of a thing here where it could be another sort of thing that the market can do. For a long time, we haven't focused on things like, M&A or these kind of activities, and that could become more of a focus going forward. So that was just kind of interesting. Now I want to also point out, all right, let's go back here to this chart. Do have lots of charts here that we use, but I want to point out Netflix, because Netflix bounced at the 8-day exponential moving average. So right now, actually, I'm going to go over here to our MA tools, and let me just remind you guys we have this. So like, if you have the rundown, you go to the top of the rundown and you grab the downloads. By the way, I created a new single zip file. I updated it. I didn't like to update it too often because sometimes when I do, it actually people's there's software might not have updated yet. So I try and actually be behind on that so that I'm using older versions so no one ever has any conflict. But anyway, I did upgrade it for the first time since November, and the new download here. Basically, I'm going to go to data. So if you go into this, you go into the zip file, and then you open the ELD, and it brings indicators into your TradeStation platform. And then after that, you can open up the workspaces, like in this case, MT Main May 2025, and you have a tab here called MA Tools. So I'm going to go to Data, Add Symbol List, NASDAQ 100, for example. You could do the S&P, but I don't want to take too long loading data. So the thing is that this is maybe the kind of approach people can be doing to find potential trend following opportunities. You'll notice here that Netflix went down, and the 8-day exponential moving average here, this blue line on the chart, if you can see it, maybe you can't see it too well, but it's a blue line right here. Now you can see we went under it, and then we just kind of sat an inch higher. So basically, and now it's going to new highs. So what I'm saying here is, in this sort of environment, when things are not moving, when the overall market is not moving much, looking for stocks that are in uptrends that pull back to that 8-day exponential moving average can be a potential strategy. So how do we find those? Well, we can go over here to MA Tools, and you click on EMA Test, and then you look for stocks here that light up with the 8 EMA as being with a positive. See? And this actually shows, for example, Comcast, for example, hit its 8-day exponential. Now, we might want to do something a little bit more interesting than that. So the other thing we can do is we can go to Studies, Add Study, and then we go to Days Since 52-Week High, which is another indicator that is in the ELD file if you were to import those. Now, a lot of you guys already have these because I've done this before, but you can go to Days Since 52-Week High Low. Let's add that. Put it over here. And now this will also load. And what this is going to show us, for example, is what we can do is, and the way I like to use this is I like to basically say, this tells me how many days since it made a 52-week high. So you can see Mercado Libre made a 52-week high 1 day ago. Now this is using yesterday's price action. So it basically meant that, it hit a new high in the most recent session, Palantir, things like that. Now, what I like to do with this indicator is I like to say, let's make a list of all the stocks that made a 52-week high in the last 21 candles, for example. So I go to add label row and it breaks that up. And then what I can do is, you know what, actually, to demonstrate, I'm going to make it a bigger period of time. Let's just say the last, you know, 50 days. I like to do 21 days, but in this case, everything has moved so much. Go to data, add label row, and then you sort on the EMA test. So you see here is a name like Gilead made a 52-week high, in this case, 47 days ago. See, that's a long time now. But the key thing is, if you had done this on Netflix, say 2 days ago, it would have lit up. And in my view, maybe not today, but 1, 2, 3 days from now, there could be names that had recently made 52-week highs. Maybe some name like, I don't even know what half of these names are, like Axon. It's the one that they own. Taser had a good earnings report. A name like, sorry, this thing keeps jumping around. Anyway, here it is at a high. Maybe it sits and pauses. You forget about it. But then in 3, 4, 5 days, boom, it hits that 8-day exponential just the way Netflix did. And then it continues higher. So anyway, that is a technique I want to kind of show you guys using the combination of days since 52-week high, an 8-day exponential moving average, looking for these stocks that are moving higher but just have that little pullback and then the continuation. By the way, a name might be doing that right now is CrowdStrike, CRWD. They actually didn't hit a 52-week high that recently. It was back in February, but it's lurking near the highs, and people might actually be looking for this to potentially set up for a breakout soon. This is also what Palantir, kind of did. It went up, it lurked near the highs, pulled back, and then continued to the upside. All right, now another thing we have here is MTES version 2, which we've shared with you guys. I want to just point out that if you look here, essentially this is the chart that gives these signals. Now look how the 50-hour moving average was rising because this big fat green line was green. I mean, it could go red, meaning it was falling. But when it's green, it means that the 50-hour is rising over the last 10 candles. And then what's interesting is stochastics went oversold. Now remember, that's one of the signals. I want to just kind of point out that this indicator, this signal continues to work even in this environment. You might only get a signal every day or two. It might happen at 5 in the morning Eastern, but it continues to be something to look at. So I wanted to kind of point that out. The combination of a rising 50-hour moving average and an oversold condition on stochastics, this has been a signal that's been working. Now, if things get bearish and goes the other way and blah, 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 it works the other way as well. If you look at more history on this, if you look at times, for example, when it was red, see right here, and then stochastics went overbought. So that was actually right there, overbought with a falling 50-hour. That was a signal. So the real thing is we're using the rate of change of the 50-hour moving average on the ES futures on an hourly chart, and we're combining that direction with an overbought, oversold using stochastics. And so this has been something that we've pointed out for a long time. We've been kind of using this in our webinars for several years now. And I want to just kind of point out that it did give another signal this morning. So don't forget, you can access that right here in this workspace as well. You have to import this indicator called MA, where is it called? I'm sorry. It's called MA Speed, which is this line here. You have to have that imported because it's a custom indicator. It's not built in the TradeStation. All right, so I got to look at something else here. I want to just point this out. This is a map of the Middle East. Now, why am I doing this? Well, because Donald Trump's over here in Saudi Arabia, and he's basically hawking American semiconductors and all of that. And I want to just kind of point out that, there's something interesting that is potentially happening now. And I would almost say that the things happening right now that Trump is doing with NVIDIA and AMD and Amazon and all these other companies, those are in many ways potentially more of a geopolitical story than really an economic story. But what's interesting about this whole area is, here's my takeaway. It's potentially good for tech, but potentially bad for energy, which is overall a positive for, the stock market. And so the thing is that, a lot of people don't really realize when you look at this, I mean, Iran just completely dominates this region if you think about it from a military perspective. and the Persian Gulf and all that. So the thing is that now there's talk about there being some kind of deal with Iran. At the same time, he's over here doing all these deals. It just seems to me that when you look at the way things are moving, that we could see some kind of less negative, bad sanctions, whatever, on Iran going forward. And I'm not an expert in these things. It just seems like the pendulum is swinging now toward less friction and less anxiety and less, kind of issues with Iran. And that could be really bad for energy. So we have to just realize that there's an Goldman Sachs put out some kind of note, like psychoanalyzing Trump's tweets. And they basically said that Trump wants crude between 40 and 50, which is versus around $60 right now on WTI. So we could be in a situation here that could become more of a negative overall for energy. Now, we had said some interesting things about energy earlier this week. I think they were interesting, but the geopolitical thing, it took me, a little bit of time to really understand some of these things happening with him being over here. But I think it's just important to realize that there is a vision that is emerging here of basically building trains across Iran that would then go up into Central Asia. There's a whole name for this. This whole thing is being planned. And the idea is India is going to trade with Russia across Iran. And so if this sort of thing happens, this has never really happened in history aside from during World War II. All the traffic has gone east-west, not north-south. So the long and short of it is that there could be a much bigger thing here where there's potentially people seeing a lot of money over many decades into the future. And if that starts to happen, this could be a lasting sort of story. Now, maybe not as big as the rise of China or something like that, but the Saudis have a lot of money and they also have a lot of sunlight. And they're in the middle of everything. So you can envision a world where there's like solar powered AI farms across Saudi Arabia or something like that. And there's trade going through this area from India up. I mean, all these things are possible. So I'm always kind of point that out. If this new vision of a geostrategic sort of thing is happening, and there's a lot of people actually that are talking about this. So if that all happens, the overall thing could be long term, it's interesting for tech, and it's interesting for the semiconductors, it's interesting for data centers, and it is also something that could result in energy prices potentially having more of a long term structural negative because of an easing geopolitical thing. So I want to just mention that because to me, this is actually, it's just interesting. It's the subtext of what could be happening behind all these other headlines. Because you have Trump over there right now. If you look, you basically have him with, doing these deals with AMD and NVIDIA for this Saudi company called Humane. There's something else of DataVolt. It's another Saudi company. Now, remember, people have been talking about AI having a moment where the sovereign market, companies like countries and governments start throwing money at AI. And, is this it? I mean, we got to realize, this could be something where maybe people like, the guy at Wedbush, Dan Ives and stuff, he has been, he's an Uber bull on AI and tech. But the thing is that could be the direction that we're going in here. So I think we just have to realize is that something big could, this could be a sort of thing that really does say, 2 to 3 years from now, there could still be a spot where chips are higher. And remember, we have that NVIDIA earnings report on the 28th. And, these things, if the tensions with China, ease in terms of the export restrictions, and there's this new demand from, the Saudis and all that. And on top of that, there's a normalization of some kind of relations, dropping sanctions with Iran, and that pushes down energy. These things are not bearish for the stock market. And I think we have to realize is that some of that stuff could be kind of, all coming together. So, this is to me something I kind of want to point out. All right, so I do got to get very briefly to healthcare here. Look at this other chart we have of healthcare. And this was to me just kind of stunning. I mean, at the same time, all this interesting stuff is happening with tech. United Healthcare, a member of the Dow, one of the major companies, huge, massive company. I mean, it is literally going through some kind of historic crisis. Now there's reports of them facing some kind of other charges and stuff, but this is healthcare relative strength. And this is with a 10-day relative strength against the S&P 500. It is lagging by the most ever since this thing launched in the late 90s. So I just want to point out that there is like a real sort of, this sector, everything happening in tech, the opposite is kind of happening in healthcare. There is a real sort of secular slowdown in the market for vaccines. And I think it's important. Gardasil was a vaccine, and Moderna. I mean, this is something here where the pendulum is swinging against healthcare when you look at it. You see that basically vaccines appear to be in a secular decline. Kind of like if you looked at newspapers in the year 2005, they were in a secular decline. And that could be now happening with vaccines, which are such a bread and butter part of the healthcare industry and the products that are out there and everything else. We have all this uncertainty with United Healthcare. I will not even venture to say much about it, aside from the fact that they have multiple negatives now with increased usage, which is hurting their margins, executive uncertainty, potential legal issues, and right now United Healthcare today again just getting really hammered. So this is a big sort of thing overall. And so the other thing is, at some point in time, it's not clear exactly how, but Medicare, Medicaid, all these different sort of government supports, they're going to be trimmed in some way. And there's a lot of ways the government can take money back away. They can do things with in terms of how they reimburse Medicare. They can just go out and cut Medicaid. So these things overall right now create a market where something like healthcare, it has had the pendulum in its favor. It has had everything in its favor for so long. And now that seems to be kind of going away. So I think that is happening in healthcare, and we do need to kind of realize it. It's unusual, it's strange, but it's happening, and that's what the trend is. The price action tells us very clearly here. Let's go to MT Main very quickly, and let's look at our key ETFs on a year-to-date basis, and let's actually see on a year-to-date, healthcare is the laggard year-to-date. Look in the last 3 months, it's down 11%. In the last month, with the S&P up 10%, it's down 6%. See right here, healthcare. So this is just kind of telling us something very clearly. And I think it's important to kind of realize here. All right, those were some important things I wanted to mention. Now, I did do a trading view idea about XLE that you might want to take a look at. Now, I have to say, when I wrote this thing, um, I was not looking at I wasn't looking at what was happening with Iran and stuff. But there are reports on Reuters. Like I said, Reuters energy plate. They are these guys they know what they're saying. If you read something on the Reuters about energy, it's usually been pretty accurate in my book. So anyway, I talked about XLE, and it's interesting today to see. I mean, remember, this is something that trades at a very low multiple. But I do think right now, from people might look to a certain extent for little business to hold up. And it was interesting to me to see how the energy ETF is still basically like people could look for it to fill its way back up. And this is a long-term chart, and they could see this might have a potential to move to the upside. But I want to just kind of point out that when you have that potential situation out there of the situation in the Middle East, and Trump basically was making, he was giving goods to the Saudi. There's been back and forth here, and you have to think in that environment that he now has that phone to pick up and tell MBS, hey, I want lower prices, and the Saudis would deliver. So I mean, it's a spot here where energy, I think, might continue to face challenges. So I did want to point that out. In my view, the sort of the context has changed really here into something that is more problematic now for energy. So I have been talking about this, but like I said, the context changed more quickly. Now, Exact Sciences is interesting. This is the sort of thing that maybe if you're going to be looking at EXAS. I did a trading view idea on this, and it was very interesting of this breaking trend line. And look how it just kind of holds. And what's it doing? It's coming off that 8-day exponential. So in this environment, that kind of signal has been interesting. I want to mention that. Also, I do want to mention Apple here. If there is a stock that's going to lead to the downside, if the market does pull back to a certain extent, Apple might kind of be there. It's been kind of stuck at this resistance here on 214, and top of the Keltner channel. All these other stocks are above their 50, even above the 200-day by now. Apple is kind of just stuck. So Apple's slightly above the 50-day, but this might be one that if the market does decide it wants to pause and drop a little, something like Apple might be one of the leaders to the downside. CrowdStrike, I mentioned. I'm sorry, I was looking at a few others. Here are some names that are nearing potential breakouts. IBM, again, here it is pushing the highs. Now, this might be one where it sits and chops for a few days, and then what happens? The 8-day exponential lights up on the radar screen if you have those tools that I'm sharing. So I'm just saying this is one here that maybe when you look at the way some of the price action has been, it'll sit and chop for a week or two. You forget about it, tags the 8-day, and then it goes. So that is IBM. Also, Uber. This is a name I think people have to realize is that, here it is. It's quietly breaking out to a new all-time high. In my view, this is a name people might look at and they say, this is a company that is in that kind of fourth inning, third inning of its long-term growth story. And I think this is Uber is very interesting the way that this thing really has held up very well during the tariffs. It really did not take that much of a hit. That's Uber. VRSK is the last one to share with you. I don't know much about this. It's some kind of, it's technically an industrial stock, but Verisk Analytics, VRSK, similar sort of thing. Broke out to new all-time high, hit a 52-week high, hit that 8-day exponential. This one popped up in some of my scans as well. Some kind of longer-term growth name. I don't know a huge amount about it, but I wanted to share it with you guys. Here's that weekly chart. You can see it's also kind of inching higher. So anyway, I hope everyone is having a great day. And you have a great weekend. We will see you on Monday with State of the Market. That's when we'll look at the individual sectors and indexes. And I will see you next week. Take care. Have a great weekend.